Risk and reward. I assume you've heard a lot about it and had basic concept how it works when you see this ratio, but how much do you know and how often do you implement it? We know the facts in modern era. We use the absorb information in scratch rather than understanding the in-depth detail, which when you started a conversation with someone, you goes, oh, I know that. But you, somehow. Anyway, for those who haven't got an idea what is risk and reward, here, by breaking down the words, we have risk and reward. Risk, you should probably have known it already as a Forex or stock trader. As you decide to sign on any of the Forex broker, this message should not be unfamiliar to you, isn't it? Anyway, risk is the amount of capital you are risking in effort to gain a profit. In simple words, is the cost. Reward is, as we said earlier, is the profit you are risking in effort of gaining it. In simple words, is the profit. Risk and reward can be similarly or equally defined it as cost and profit, literally. When you see someone start a conversation, they talk about risk to reward ratio, risk and reward ratio, or risk reward ratio, any one of them. It always goes from left to right, risk then reward. If you heard someone say 1 to 2 RR, yes, 2 Rs mostly appear on the forum, they meant risk 1 for 2. Deal, you get the basic yet? Then let's move on. Now think of you as a trader, which I assume you already are. You open your trading software, a couple of trades are running and you're seeing profit. If your past hunting experience, you're tempted to press the close deal in profit. You're like, if I don't close it now, I will soon regret. You decide to close the trade in small profit. Whether it's or not your reward goal is achieved. Up in front of your eyes, there are two possibilities. The first one is, I knew it, I shouldn't have closed it, I should have followed the rules. The second one is, heavenly luck, God bless, Jesus Christ. Whether fate ends up the first possibility or second, when you are risking more for small profit, yes, you may win once or twice, but your profit factor will be less than 1. Profit factor is a measurement terms for traders' trading performance, where a profit factor of 2 meaning you're losing $1 but you're winning $2, meaning every single trade you made wins you $1. That means in long run, every single trade you are to open in the future earns you $1. Sure, as a newbie trader that just started, you tend to hear noises, recommendation, saying, I think 1 to 3 risk reward ratio is the most ideal rule. Every trader, especially newbie, should follow it. Right and wrong. Not exactly right, but not exactly wrong. Half right, half wrong. If you have been studying trading strategy for a while, you will notice most short-term trading strategies tend to have a lower risk-reward ratio like 1 to 1 or 1 to 2. Most commonly found under day trading strategy, where all trade must be closed before the market closes. Well, long-term trading strategies like swing trading, for example, used to have like 1 to 10 risk-reward ratio or possibly more than 10. Yeah, we will talk more about this later. Something I would like to share personally, I have tested hundreds of backtesting on Forex with different risk and reward ratio. I found that under the law of large numbers, Forex works similarly to Russian roulette, where when you bet on the red black, a 1 to 1 risk reward ratio, the win rate ends near 48%, 1 to 2, 32%, 1 to 3, 24%. Then when you reverse it, you get 2 to 1, 65%, 3 to 1, 74%. At this moment, you might be wondering, why wasn't it 1 to 1 50% win rate? Why did you put it up 48%? Spread. The reason falls on spread. I guess you have already known what is spread, right? It's the price differences between buying and selling price. It's also the price you have to pay on every new single trade. If you extend your stop loss, so the percentage of the cost of the spread decrease. That's why I don't recommend scalping strategy to any new trader, since most of these strategies suggest tight stop loss like 5 to 10 pips. Instead, go for swing trading. I've actually visualized it with ugly drawings on my previous video, swap martingale strategy if you're interested in watching them. Continue the 1 to 3 risk reward ratio that most traders recommended. Now that you think, if I follow the rules they recommended, does that mean I will end up not profiting or losing? Is those talk cheap? Sort of. Actually, those are the scratch you will often hear. Risk reward ratio are largely dependent on the trading strategy you are working with. and your trading style. We will continue this later. Say for example, you're an account owner with $100 balance, you're trading on Euro USD and 0.10 standard lot trading size on every new opening trade, which is each pip move cost or profit $1, ignoring the facts about the spreads, margin, and overnight fees and all sort of hidden charges. Your stop is fixed at 25 pips or $25. You have 4 lives to lose. Lose 4 lives and you're game over. You work on a 5-to-1 risk reward ratio plan which possibly had an 83% win rate. You're risking 25 to gain $5. You enter a trade, the market favors you and your account grows strong with your constant monitoring. You won 10 trades in a row but the 20% lose rate hits up. Overall, you gain $25, but the energy and the time you have invested, not to mention how many times your heart rate beats over 100 times per minute. Now we swap it to 1-to-1 risk reward ratio with the same setting. This time we are risking $25 to gain $25. It's a 50% win rate game. As you start trading, unfortunately, sorry to say it, I just couldn't open my mouth. You lost 4 times in a row. 4 life loss. Game over. You're like, what? Isn't losing the first trade consecutively adds the win rate up? Like 50%, then 75%, then 82.5%, huh? Yeah, if such strategy exists and it works, please, here's my email address. Although under the law of large numbers, these odds may work. Pretty big topic, we will do it another day. Now as you see, there are advantage on high risk low reward plan too, which pretty much you heard everyone saying no, low risk high reward. It goes, if you have a 50% win ratio on 1-to-2 risk reward trades, you lose $10 and you win $20. You lose $10 again and you win $20 again and again. Eventually your account is doubling up. That's a concept, a belief. That's not a fact, not a result. Back to the example we mentioned earlier, there are also disadvantages on low risk high reward plan too. If you don't get a picture here, simply define for 5-to-1 risk reward plan, 83% win rate. On a low balance account, win rate in short term though risky, but it's the best way to grow your account fast because you're likely to profit first before losing. For 1-to-1 risk reward plan, 50% win rate. On the low account, balance again in short term are most likely unfavorable to you. Do you get it? Okay, again, if you are trading on a 1-to-1 risk reward ratio plan, you only have 2 lives or 2 chances, then good luck for not hitting the wrong side. That said, it is recommended to have at least 30 lives or 30 chances to experience with your trading strategy before seeing positive or negative results. That 1-to-2 risk reward ratio plan should have at least 60 lives or 60 chances. 1-to-3 risk reward ratio, 180 lives or 180 chances, and so on. Before seeing that shade of light. Well, I'm not saying that 1-to-5 risk reward ratio are static at 16.65%. Their trading strategy works well on swing trading where the probability of 16.67% win rate can be increased further. We will talk about this topic in the future. Here we have an example showing a certain trading instrument, a possible trend which moving along the channel. Roof reach and bounce. Floor reach, bounce. This pattern repeats. This time the price closed near the floor, which a possible bounce will occur. Now a question, if you are a trader, will you enter a trade? 5 seconds or pause the video. You should. Look, by dragging out the risk reward illustration tools here, what do you see? We are risking 1 for possibly. Why not? That's a great opportunity. Then as the chart continues, should you buy it here? 5 seconds. No. You're risking 1 for, and that's a bad trading examples. You get the idea? Switching to swing trading mode to demonstrate you how to buy low, sell high, risking little for big reward. We have the 2017 Euro USD chart here. Scrolling back to the historical price, we are seeing the supply levels here, where a strong bounce comes in place when this level was touched. You're standing at 2017 and it's New Year. Happy New Year! Yay! I remember I opened my browser and saw a bunch of rumors spreading of Euro USD will break $1 soon. There was a thought in my head whether or not if this rumor were real, it is not important. It's on the supply level and it's getting near to $1, a psychological price level that could possibly act either a strong bounce or a strong breakout. Well, I prefer buying at 1.01, but I don't want to miss out the opportunity to. In case if it just went skyrocket without coming back again, I went for cumulative positions. That means I plan to accumulate minor buy position as the price goes down. It did. It went out eventually not hitting 1.01, my desired entry point, so do everyone's. You saw the risk reward ratio here? That's how it works. Depends on you. There are traders who trade only 1 to 5 times per month, while some traders trade 5 to 10 times per day. Question here, which do you think is profitable? 5 seconds. The answer lies on the probability based on your trading strategy setup. If you have tested a great number of automatic trading robots, you have come to realize that some of these trading robots only trade like once or twice per month and yet is profiting. Why? High probability setting. That's all for this video. Appreciate a thumbs up. Leave me a comment if you have any question and goodbye.